Your favorite show, The Mutual Fund Show.
The Mutual Fund Show Anniversary Special, Wednesday 4 p.m. only on Bloomberg Quint.
You're watching All You Need to Know on Bloomberg Quint Live. I am Jayesh Khilnani and I have with me Darshan Mehta to take us through the derivative space. But first, let's have a look at the handover from the US market. All three indices in the US market closed lower, with the Dow Jones dragging about 180 points lower. And if you look at the European screen, that in fact traded with a positive bias. But Asia, that has in fact opened on a negative note, with the Japanese Nikkei 225 plunging more than 1% in trade, and the Hang Seng down about 0.8%. And if you look at the SGX Nifty, that is indicating a 0.25% lower start for the Indian market, currently trading about 24 points lower, and a start near the 10,525 mark can be expected for the Indian markets. If you look at some of the areas that traded on the US exchanges, we had positive close for most of them, with Tata Motors, Dr. Reddy's and Wipro surging nearly 2 to 4%, and we had Infosys, which also gained about 0.75%, with the only exception of HDFC Bank, that closed about 1% lower. Now, as far as commodity cues are concerned, oil prices are currently trading lower, with a negative bias of about more than 0.5%. Some time back, this was in fact about 0.2 to 0.3%. And it has in fact slipped from the day's high. As far as the base metal space is concerned, we had a mixed close on the London Metal Exchange, with the index itself climbing higher. We had copper, nickel and lead, which surged in trade, and we had the other commodities, metals like aluminium and tin, which declined in trade, with zinc closing about 1.5% lower. Now, if you look at the Shanghai Futures Exchange, these base metals are in fact trading with a negative bias, with zinc and steel trading more than 1% lower, and the exception being copper, which is trading about 0.5% higher. Gold prices continue below the 1300 mark. No major cues coming in over there as well. But if you look at the fund flow picture, yesterday what happened was the FIs sold 1,650 crores worth of equity, while the DIs pumped in nearly 1,500 crores worth of equity. And for the month itself, the FIs have sold more than 4,500 crores, while the DIs have now bought in more than 10,000 crores for this month itself. As far as key indices are concerned, we had a positive close for most of them, with the Nifty climbing about 20 points, and the mid-cap space and the small cap space in fact outperformed the Nifty. Small caps closed about 1.5% higher. With regards to the gainers and losers, we had the Nifty PSU Bank Index, Nifty Metal and Nifty Pharma Index, which are the top gainers in trade, about 1.7 to 3.5% gains over there. Nifty Energy and Nifty FMCG Index, those were the two declining index. So we had the India Volatility Index, that actually declined more than 5.5%. And as far as contribution for the 20-point gain on the Nifty is concerned, we had SBI, Infosys, Tata Motors and Maruti, which closed positive, while we had ITC, TCS, Kotak Mahindra Bank and Reliance, which closed negative. But that said, Darshan, what can we expect from the futures and options market?
It's going to be rather muted, because that's the range that we're seeing. The Nifty was up just 20 points in trade yesterday. There was short covering that was seen in the Nifty. The open interest was down close to 0.7%. Similar was the case with the Nifty Bank, that also saw short covering on the back of Nifty open interest down by almost 2.5%, and that was mainly led by the PSU banking stocks in trade. Now, if you're looking at the open interest build up yesterday, call writers became aggressive at levels of 10,800 and 10,400, that 10,500. That's where positions are being taken. Yesterday it was the bears that actually tried to take the Nifty down. If you take a look at the total open interest, and you can get an indication that the bulls are active from levels of 10,600 to 10,800. The bears are active from 10,600 to 10,800, while the bulls really want to defend the 10,500 mark in trade. So if 10,500 is taken, there could be more selling pressure that could come in. Now, as far as the PCR is concerned, the Nifty PCR went down. The Nifty Bank was rather strong in trade, and that is why the Nifty Bank PCR moved up from levels of 0.75 to 0.83. So that's what exactly happened. BML enters the FNO band. The counter was down almost 9 rupees in trade. Three counters exit the FNO band, that is Balrampur Chini, PC Jewelers and Wokhart. These are the counters that go out. Some of the stocks in focus, first of all, is Strides. Yesterday saw a huge amount of short covering. Open interest was down 18%. The counter moved up almost 15%. And the second stock in focus was Indian Oil, which saw fresh shorts. Open interest build up was almost 8%. The counter fell down by almost 3% in trade. But let's go across to Bloomberg's Paul Allen for all the top headlines that are happening across the globe.
Congress has approved a sweeping overhaul of U.S. bank regulations, sending President Trump legislation that's the most significant to oversight since Dodd-Frank in 2010. It gives smaller lenders relief from post-crisis rules that they've criticized as burdensome and costly by raising the threshold for stricter Fed oversight from $50 billion to $250 billion in assets. Facebook boss Mark Zuckerberg took questions at the European Parliament but left lawmakers irritated by what he avoided saying. He repeated what he's told every audience recently, that Facebook didn't take enough responsibility for user data, fake news and foreign interference, and he apologized. However, he batted away many questions, including whether Facebook is a monopoly that should be broken up.
I can commit to you here today that we have never and will not make decisions about what content is allowed or how we do ranking on the basis of a political orientation.
UK Foreign Secretary Boris Johnson has set Prime Minister Theresa May a list of Brexit demands, saying she must get on with it as fast as possible. Johnson spoke to Bloomberg in Buenos Aires, saying May is responsible for ensuring the UK takes back control of its tariff regime. It's the strongest comment since May's team agreed last week on a compromise that could keep the UK tied to EU trade rules for years.
The Prime Minister is the custodian of the plan, which is to come out of the customs union, out of the single market, and to get on with that project with all convenient speed. That is what we're going to do.
Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Facebook had this hearing prepared in such a way where all the questions were asked for about an hour, and then Zuckerberg responded to them in bulk for about 26 minutes. So he just said, you know, you asked some questions about content. Here's what I think about content. You asked some questions about data. Here's what we're doing on data. And it really didn't get to the heart of a lot of these very specific questions that European lawmakers had prepared, especially when it comes to whether users should be able to opt out of targeted advertising, or whether Facebook is a monopoly, whether Facebook should be broken up to split off Instagram and WhatsApp, for example. All of these very sort of clear and concise questions, Zuckerberg was able to answer them with very general steps the company has taken to try to do a better job in the last few weeks.
Okay, but Sarah, I mean, you followed both of these hearings. What were some of the big or new takeaways? I mean, what did we learn exactly from Zuckerberg? Was there anything new?
Yeah, I mean, we learned that the company is going to face some potential antitrust scrutiny in Europe that we haven't seen be really a huge topic there in the past. That was the center of a lot of questions from European lawmakers. The other question was about these people who are tracked by Facebook, even though they're not logged in or maybe they don't have accounts, how Facebook is going to comply with GDPR if it's by default tracking everyone, and only the people who opt out, in order to know that they've opted out, you have to look and scan what they've done on the internet. These are all very complicated things that Facebook hasn't really explained. All they've done is try to make a good faith effort to show that they're moving forward in these areas. And Zuckerberg didn't really say anything to help us move forward on those questions in a way that we haven't in the past.
Back to local equity markets. Stock of the day is Minda Industries on back of good set of numbers reported by the company. Revenue has seen an uptick of 53% year-on-year basis for this company at a number of around 1,371 crore as compared to 897 crore. We're seeing more than 122%, more than 100% jump at a number of around 140 crore as compared to 36 crore in the corresponding quarter. This bottom line performance also on account of strong operational show. We've seen a 62% growth in EBITDA at a number of 170 crore. If you look at the margins, that's 12.4% as compared to nearly 11.7% in the corresponding quarter of the previous year. Also, if you look at what has led to good set of numbers, higher revenue along with your stable cost, both variable as well as fixed expenses, no rise there, has seen a good operational performance. Your employee benefit expense as a percent to your net sales has come down to 12.9% from 13.4% earlier. Also, we've seen an exceptional gain in this quarter. Now, this relates to the gain is around 338 crore, and this gain relates to the provisioning that we've seen made on account of export obligation towards the subsidiary. If you look at the full year number, they are encouraging too. Top line growth has seen a growth of 32% at a number of around 4,471 crore. We're looking at an 88% uptick in the bottom line performance at 310 crore, and EBITDA too has seen a sharp growth of 43% at a number of around 534 crore.
Let's also get you a check on the commodity space, starting off with oil prices, which are currently trading about 0.5% lower, and this is the second straight day that we are seeing some bit of softness come about for oil prices, primarily on account of the Venezuela sanction concerns that spurred up overnight. Now we have the US actually banning the purchase of Venezuela government debt, and also that API is expected to report an inventory decline of about 1.3 million barrels for last week. So that's about the oil prices, but shifting focus to the base metal space, the index itself closed about 0.5% higher, and the most of the base metals in fact closed with a mixed bias. So copper futures in fact were in focus as it hit the highest level in more than 3 weeks on the COMEX exchange, and we had China, which said that it will in fact lower its import duty on passenger vehicles. So that was the positive for the steel makers and copper prices as well. As far as LME inventory data is concerned for nickel, that in fact dropped most in about 2 years on the back of Asian outflows that we have seen, and LME led surged more than 5% in the last 2 days. So that metal has been in fact in particular focus. Now if you look at the Shanghai Futures Exchange, most of these base metals are in fact trading with a negative bias. Shanghai Steel is about trading more than 1.5% lower, so watch out for that one. Moving on to the precious metal space, we had some uptick come about for both silver and gold prices on account of a softness in the dollar index.
Right. Amongst the stocks that we're tracking today includes a couple of companies which have come out with a strong set of numbers, starting off with Bata India, a revenue growth of 7% and a much stronger PAT growth of 44%. Even if you look at the operational performance, the EBITDA rose by 43% and the margins rose about 350 basis points from about 9.7% to 13%. Yet another strong set of numbers coming in from Future Consumers. While revenue grew by about 51%, the net loss has narrowed from 10 crores to 4 crores. So still a net loss, but it has narrowed. But as far as the operational performance is concerned, EBITDA jumped about 8.5 times, while EBITDA margins also inched up. So that's Future Consumer. We're also watching out for Music Broadcast, where revenues grew by about 13%, net profit grew 3.5-fold, while EBITDA margins rose from 26% to 35%. You have, on the other hand, a disappointing set of numbers coming in from Igarashi Motors, where revenues dropped by 19% and the net profit dropped by 13%. As far as the operational performance is concerned, again, you saw EBITDA degrowth, and the margins came in at about 25%. So watch out for some of those names. You also have Majesco, which has won a contract for distribution management solutions. So watch out for that name. As also for Gravita India. Now that company has signed a contract with Amara Raja to supply pure lead and lead alloys. So this contract is valid for FY19, so it will add to top line growth for the company for FY19. So these are some of the names you need to track.
While announcing the 7,700 crore loss for the January-March quarter for State Bank of India, its chairman Rajneesh Kumar didn't miss a beat before saying that the worst was behind them. Now, this is not something that Rajneesh Kumar has said for the first time. In fact, this has been repeated many times in the past, but it hasn't truly reflected how the bank's balance sheet has performed. But this time around, Rajneesh Kumar believes that they have a 2-year roadmap which can help them turn around the bank and achieve certain goals that the management has set for State Bank of of India. Let's try and understand what this 2-year roadmap looks like. They want the credit growth, which is currently at about nearly 5% at the end of March 2018, to grow to over 12% by March 2020. According to State Bank of India, there is plenty of economic activity happening at this point in time, especially in the cement and the steel sector. There is also a lot of market share available because certain public sector banks have been faced with lending restrictions by the Reserve Bank of India. So there will be those opportunities for SBI to grow further. Alongside growing its loan book, SBI will also reduce its dependence on the high-cost corporate deposits so that its net interest margin can increase from about 2.67% to 3% within these 2 years. While doing these things, the State Bank will also try and cut down its credit costs and bring its return on assets from about negative 0.19 to nearly 1%. That is what State Bank aims to do in the next 2 years. Let's look at the asset quality picture, because that is where there is a lot of weakness within State Bank of India. Its gross NPA ratio at this point in time stands at about 10.91%. What State Bank aims to do is to bring it down to below 6% by March 2020. That will be closer to where SBI was before the Reserve Bank of India initiated the AQR, or the Asset Quality Review, back in October 2015. Before that happened, its gross NPA ratio was closer to 4.5. So this 6% or less than 6% will be actually closer to that. Alongside, the net NPA ratio will also be brought down to nearly 2.3%. While this is all happening, the slippage ratio, which is the ratio of accounts that move from standard to NPA category every quarter, that will be brought down to less than 1.3% within the next 2 years. That is what SBI aims. Now, while doing all of this, SBI is also trying to reorganize its businesses, ensure that stressed asset management is moved to a specialized group with specialized professionals handling it, while the rest of the bank can focus on growing the loan book and growing business relationships with corporates, large as well as mid-size. SBI is also trying to merge the project appraisal scheme, project appraisal system that is within SBI Capital Markets as a separate business. They're trying to merge that with the bank so that the bank can better monitor and better lend to corporates in India, whilst SBI Caps can continue as a pure play investment banking arm for the bank.
Well, we have minor price revisions coming in from brokerages on SBI with no change in the rating or stance as far as the lender is concerned. This is largely on account of the belief that asset quality damage wasn't as bad as compared to some of the peer group lenders, and also about 75 to 80% of the slippages came from within the known stress pool. So that's why this stance coming in from brokerages. Overall, you have Credit Suisse, which has maintained an outperform but cut their target price from 381 to 322. They seem to be the most bearish ones. They've cut the EPS by 3% to 20% on back of higher provisions, and while they do believe that the gross NPAs have likely peaked out at 10.9%, because they have a bad loan cover at 50%, which is relatively lower, credit costs they believe will normalize only from FY20 onwards. So while residual stress is contracting, they've said that the bank will need additional capital to support loan growth. You have Bank of America Merrill Lynch, which has maintained a buy and maintained their target price at 380 as well. They've said that the recognition cycle is now behind, and recovery and loan growth will drive sharp rebound in earnings going forward. And they also believe that SBI is the key beneficiary of the asset quality and loan growth cycle. Hence, they have retained their buy rating. Motilal Oswal again maintained a buy. They've raised their target price marginally by 3 rupees to 365. They believe that the asset quality damage in the fourth quarter was controlled. The credit cycle, they say, is coming to an end, and earnings hence will gain traction over FY19 and FY20. In fact, they've raised their target, the EPS or earnings estimates for FY19 and 20 by 36% and 12%. On the other hand, you also have Prabhudas Leeladhar, which has again maintained a buy and raised the target price marginally by 7 rupees to 349. They say that while the asset quality issues are yet to be over, because there is some bit of stress recognition which is yet to be done, but it's resolutions which will drive earnings and asset quality going forward. So all brokerages seem largely optimistic as far as the FY19 and FY20 numbers are concerned.
Cipla came out with a rather disappointing set of numbers. If you're looking at the top line grew just at 3%. The estimate was much higher. Margins coming in at just close to 15% versus the estimate of 20%. Even profit coming in at 178 crores versus the estimate of 438 crores. No doubt there were a lot of one-offs that were there, but despite, even if you adjust for all of that, the numbers were rather weak. Now, if you're looking at the internals itself, higher other income and higher other operating income was the one that led to the top line growth that came in, but a lot of one-offs that came in. First of all, there was the 78 crore charge, exceptional loss on account of the NPPA and the DPCA issue, 45 to 50 crores other charge in other expenses on higher selling and general administrative expenses, 51 crore loss that was taken in other income on account of closure of the Yemen subsidiary, and $11 million was on sale of patents and licensing to partner. So clearly there were a lot of one-offs that came in, but despite all of that, the numbers were still below. The management commentary was rather weak. Even if you take geographical spread, India was decent, but the other markets didn't do as well. South Africa did well on account of the currency appreciation. US was just growth of just 4% on a low base. Now the management in the con call expects that US, India and South Africa to continue to drive growth for the company in FY18. India business will have a probably $1 billion sales in FY19, which would mean a growth of 14% on a YOY basis, and they expect margins to improve on the back of cost controls that will come in. Basically, they are expecting growth in the US markets because of limited competition drugs and the market share gain in Pulmicort, but nevertheless, it was pretty much on expected lines. The commentary, nothing exceptional. Expect the stock to react negatively to the numbers that came out.
For Tata Motors, we are expecting a healthy consolidated performance. Of course, the key contribution will come in from the JLR entity. So let's talk about the consolidated earnings. We are expecting revenues to be in excess of 88,000 crores for Tata Motors on a consolidated basis. That will be a growth of nearly 14%. However, we are expecting profits to decline by nearly 14% on a year-on-year basis, to come in at close to 3,750 crores. Of course, this is because of the lower contribution coming in from the standalone entity. Margins for the consolidated entity are seen at 13% versus a level of 13.9%. However, JLR should be doing well on the operating side. We are expecting the EBITDA to move up marginally by 2%. However, we could see a good margin improvement, margin seen at 14.5% versus a level of 13.6%. So, JLR would be doing well on the margin front. Profitability, however, for JLR, because of a large base last year, would be seen down 42% to a level of 542 million British pounds. Of course, as I was mentioning, standalone business can be a drag on the overall performance. Margins for the standalone entity are seen in the range of 8.5%. Average selling price should be seen lower by nearly 3% on a year-on-year basis because of adverse currency movements that we have seen. If you talk about two brokerages, Kotak and Nomura, they're expecting the foreign exchange losses for the consolidated entity and the JLR entity to be in the range of 150 to 200 million British pounds. So that is something important we'll be watching out for. Apart from that, the management commentary on the recent trade war, impact on the overall profitability. How is really China looking at cutting taxes on imported cars? All of these factors would be important apart from the earnings to watch out for.
Let's also look at some of the stocks that saw high delivery buying and selling, starting off with Ashok Leyland. Now that was up about 5% in trade and saw delivery buying of more than 200 crores. The delivery volume surged 51% at nearly 1.5 crore shares as compared to its 5-day average, and the total volume doubled at about 6.7 crore shares as compared to its 5-day average. Second stock to watch out for, that would be Bajaj Holding. Now that was up about 5.5% in trade yesterday and saw delivery buying of more than 200 crores. The delivery volume surged more than 3 times at nearly 7.3 lakh shares as compared to its 5-day average, and the total volume surged more than 4 times at about 7.7 lakh shares as compared to its 5-day average. Last and final stock, Dr. Reddy's. Now that was up about 6.2% in trade yesterday and saw delivery buying of 80 crores. Now the delivery volume actually surged about 42% at nearly 4.1 lakh shares as compared to its 5-day average, and the total volume surged about 170% at nearly 21.5 lakh shares as compared to its 5-day average.
All right, so petrol and diesel prices rise once again. You have that to talk about. You have the Fed minutes that come out later today. So several things that you can find over the course of the day on Bloomberg Quint Live. There are also a few stories that you can find on the website, bloombergquint.com, starting with this one. It's good news for air travelers. You soon won't have to pay a cancellation fee if you cancel your tickets within 24 hours of booking. That's provided the cancellation is done more than 4 days before the flight is scheduled to depart. And it's also provided that the draft air passenger charter gets cleared. Civil Aviation Minister Suresh Prabhu told people the good news on Twitter. And a new management team has been put in place at Bhushan Steel after it was acquired by Tata Steel through India's new insolvency and bankruptcy process. All right, that's all you need to know going into trade today. Up next is Indian Open, and it'll take you through Market Open. Thanks so much for watching. This is Bloomberg Quint.